Consistency is the ultimate key in trading. Every trader you meet, beginner or pro, shares one dream: to be steady and reliable. They crave profits that grow smoothly, not wild ups and downs of wins and losses. But even though everyone wants it, only a handful of traders ever get there. And why is that? It's not about their market knowledge. It's not that their plan is broken or the market is unfair. The truth is, the real battle isn't with the market. It's within the mind. Until traders realize this, they'll keep running in circles chasing something they can't hold. Think about how most traders begin. They stumble upon trading, maybe through YouTube, social media, or a friend who made quick money. The thrill grabs them instantly. They dive into charts, memorize candlestick patterns, and learn indicators. They design a plan, or just copy someone else's and start trading. At first, a few trades go right. That early success convinces them they've figured it out. They feel unstoppable, believing consistency is just one step away. But soon reality strikes. A streak of losses begins, and that once perfect strategy now seems broken. Fear, doubt, and frustration start to take over. They start changing things, dropping systems, chasing new ones, and end up trapped in inconsistency. Consistency doesn't come from the market itself. Because the market is naturally unstable. Sometimes it trends, sometimes it doesn't. Sometimes it reacts to news. Other times it completely ignores it. The market isn't built to give you steady results. It's unpredictable, ever-changing, and emotionally testing. That's why expecting consistency from it is the first major mistake traders make. The consistency you're searching for must come from within you. It must be built through your habits, your mindset, and your ability to execute your plan the same way every time. Most traders miss this truth. They think consistency appears once they find a perfect strategy. But no, it's not strategies that create consistency. Even the best strategy fails without discipline and risk control. A trader with even a simple plan can still find stability if they have patience and discipline. But our brains aren't naturally made for steadiness. They're built for survival. And in trading, survival instincts show up as fear and greed. Fear makes you close winning trades too soon or skip good setups. Greed makes you trade too big or hold too long, hoping for more. Both lead to emotional actions, and emotional actions destroy consistency. Each impulsive move breaks the discipline that builds long-term results. Picture a trader winning 3 trades in a row. Confidence grows. Then greed kicks in, they double the size and lose everything. Now imagine another trader who loses 3 trades and takes a huge revenge trade, blowing their account. And that's why so many traders feel consistency is impossible. It's not the system, it's their emotions. Consistency means turning trading into a routine process, not a guessing game. Think about casinos. They never know each outcome, but still win over time. That's exactly how traders should think. Focus on the edge, not each result. You don't need to win all trades. Just keep executing your plan and let probability do its job. Before we go further, are fear, doubt, or overtrading holding you back? Most traders don't fail because their systems are bad. They fail because their mindset is weak. It's filled with real, practical steps to master your emotions, stay disciplined, and trade like a professional. Most traders understand all this in theory, yet fail when it comes to actual trading. Why? Because theory can't train your emotions. Reading about discipline doesn't make you disciplined. Watching motivational videos won't remove your fear when you're staring at a losing trade. The only real way to stay consistent is to train your mind like you train your body at the gym. Discipline grows through repetition, doing the same thing again and again until it becomes part of who you are. It's not flashy. It's not thrilling. In fact, it's boring, but that boredom is what creates consistency. Most traders don't like boring. They want excitement. They crave that rush, that adrenaline, that feeling of every trade being the one. And that's exactly what destroys their consistency. If trading always feels exciting, you're probably doing something wrong. True consistency feels calm, structured, and predictable. Not in the market's behavior, but in yours. You already know what you'll do in every situation because you've trained yourself to respond that way. One of the biggest killers of consistency is the endless hunt for the next best strategy. After a few losses, traders assume their system is broken. They quit and start chasing another shiny strategy. They test that too, face another losing streak, and repeat the cycle. This constant hopping keeps them trapped in inconsistency forever. The truth is, every strategy has losing trades. Every trading edge goes through rough patches and drawdowns. The difference between a trader who succeeds and one who fails is simple. The winner stays the course. The loser quits too soon. Another hidden reason traders can't stay consistent is because they measure success the wrong way. They believe consistency means winning every day or making profit every week. But that's just not real. Even professionals lose weeks, sometimes months. Consistency isn't about daily profit. It's about following your plan trade after trade. When you zoom out, small losses and bad days don't matter. What matters is the long-term curve. But most traders never reach that point. They quit early, obsessed with short-term results. So, how do you break that cycle? It all starts with a shift in mindset. Stop asking, did I win or lose? And start asking, did I follow my process? That's the only question that truly matters. If you followed your plan, that trade was a success, no matter the result. If you broke your rules, it was a failure, even if you made money. This mindset teaches your brain to value discipline over short-term results. And that's the foundation of true consistency. The next step is separating your self-worth from your trading results. Too many traders link their identity to wins and losses. A losing day makes them feel worthless. A winning day makes them feel invincible. That emotional roller coaster keeps them inconsistent. You are not your profit or loss. You are the manager of your process. Once you detach yourself from outcomes, you stop overreacting and start building consistency. Finally, understand the truth. Consistency isn't a destination. It's a daily practice. You don't master it once. You recommit to it every day. The moment you relax, inconsistency sneaks back in. That's why great traders stay humble. They know perfection isn't the goal, control is. It's about managing yourself, your emotions, and your discipline day after day. If you're struggling with consistency, know this: you're not alone. Almost every trader fights this same battle. The only difference between those who quit and those who win is this: winners build consistency within, not from the market. They stop chasing shortcuts and start mastering discipline. And when that mindset clicks, everything changes. Consistency becomes your new reality. Consistency is the holy grail of trading, yet most traders never reach it. The market doesn't demand perfection. It just asks you to stay consistent long enough for probability to work in your favor. But this is where most traders fall short. Because the real battleground of trading isn't on charts, it's inside the mind. Picture a trader sitting in front of his screen. The setup forms exactly as planned. Clear support, confirmed entry, stop loss, and target perfectly aligned. Everything seems flawless. Yet, in that silence, another voice whispers, what if it fails? What if the market flips the moment I enter? What if I lose again? That's fear taking over, and fear is the silent killer of consistency. Fear doesn't rise because the setup is weak. It rises because the mind can't stand uncertainty. Humans are built to avoid pain and protect themselves. But in the markets, that instinct turns against us. Instead of trusting the plan, fear makes traders close trades too early, widen stop losses, or freeze until the chance is gone. And when fear drives action, the trader stops following logic and starts following survival. But fear has a twin, and his name is greed. If fear makes you exit too soon, greed makes you stay too long. You set your target, your plan says take profit, but when price hits, you think, maybe it'll go further. You hold on, hoping for more. And sometimes it works, but often the market reverses and wipes it away. Watching a winning trade turn into a loss cuts deeper than most losses, and that pain comes from greed. It's the inability to feel content with simply following the plan. Then comes impatience, another silent enemy of discipline. Most traders don't fail because their strategy is bad. They fail because they can't wait. Waiting for the right setup feels unbearable. Sitting through hours of quiet charts feels like torture. So they create trades that don't exist just to feel active. They take weak trades to fill the silence, and those decisions cost them money. The real danger of impatience is the loop it creates. After losing on a bad trade, the trader freezes when the real setup finally shows up. Doubt creeps in, confidence fades, and they miss the very move they were waiting for. Impatience doesn't punish once, it punishes twice. On the other side of fear and impatience lies overconfidence. It usually appears after a string of wins. The trader starts to think they can't lose. Rules start to feel optional, position sizes grow, and risk control fades away. Then suddenly, one loss erases the profit of 10 good trades. Overconfidence tricks you into thinking you control the market, but the market always has the final say. A consistent trader never lets short-term success destroy long-term discipline. Behind all these emotions, fear, greed, impatience, and overconfidence, hides something even darker: self-sabotage. Many traders don't fail because they lack skill, but because deep inside, they don't believe they deserve to win. It may sound strange, but think about it. How often have you been in profit, only to make one careless move that gives it all back? You blame bad luck, but often it's your own mind pulling you back. If you've spent your life expecting struggle, your subconscious will keep bringing you back to that level. Even when you consciously try to succeed, your inner beliefs fight against it. So trading stops being just about charts. It becomes a fight with who you believe you are. Another reason traders lose consistency is the endless hunt for the perfect strategy. They keep jumping from one system to another, never giving any enough time to work. They think the next indicator will fix everything, but the real problem isn't the strategy, it's the psychology. The system doesn't fail, the mindset does. By quitting too soon, traders never let consistency show its power. Think about a casino. It wins because it plays its small edge thousands of times with discipline. They don't care about one spin or one hand. They trust the math. Now imagine if a casino stopped after 10 rounds saying, "We lost half, maybe this doesn't work." Sounds ridiculous, right? Yet that's what most traders do after a few losses. Consistency breaks when traders confuse results with process. They often judge themselves by whether a trade wins or loses, instead of by how well they followed their plan. That's a mistake because short-term results are mostly random. You can take a flawless setup and still lose, or take a bad one and win by luck. If you only call success a win, you'll keep changing your approach, chasing wins instead of mastering your process. Real consistency comes when you judge your performance by execution, not results. Another mental trap that causes inconsistency is comparison. Traders often compare themselves with others, friends, mentors, or influencers showing profits online. That comparison builds pressure. You start feeling left behind. Then you begin forcing trades to catch up, and in doing so, abandon your plan. Ironically, comparison makes you blind to your own growth. Instead of tracking how far you've come, you compare yourself with people whose journey you barely know. Comparison steals focus, and without focus, consistency can't exist. Discipline is another concept people often misunderstand. Many think it means suppressing emotions, but that's not true. Discipline means building strong systems so emotions can't knock you off course. A professional trader still feels fear and greed, but acts on plan, not emotion. They understand that their rules protect them from their own impulses. Consistency isn't about removing emotions. It's about not letting them control your actions. Let's make it clearer with a story. Imagine a trader named David. For 3 months, David tested a strategy that gave him a clear edge. He studied the numbers, trusted the probabilities, and decided to trade it live. In his first week, he made 5 trades. 2 won, 3 lost. Fear whispered that maybe his system had failed. He nearly gave up, but then reminded himself of the math and kept going. Next week, he had 4 wins and 2 losses, still not perfect, but improving. By the month's end, David was finally profitable. What set him apart from thousands of traders who quit? It wasn't superior skill. It was his ability to stay consistent through pain. Consistency isn't a mystery. It's simply the daily act of sticking to your plan despite emotions, setbacks, or market noise. It's built one trade at a time, one choice at a time. Every time you resist fear, greed, or the urge to break rules, you strengthen your discipline muscle. And with time, that discipline grows so strong that inconsistency loses its power. The psychology behind inconsistency is powerful. It exposes every weakness of the human mind. Fear seeks safety. Greed wants more. Impatience demands instant results. Overconfidence craves control. Self-sabotage tries to keep you at the level your self-image accepts. Together, these forces form a storm that wrecks discipline. But once you recognize them, you can separate them from who you are. You'll realize they're not the market, they're just voices inside your mind. And the moment you detach those voices from your actions, you start walking into true consistency. In the end, trading isn't about fighting the market, it's about mastering yourself. Every candle on the chart is neutral. It doesn't care who you are or what you feel. The only real opponent is within, the part that fears, doubts, and rushes for quick gains. Conquer that, and you'll find the consistency most traders chase but few ever reach. There's one truth that separates amateurs from professionals. Consistency isn't an outcome, it's a behavior. Most traders chase results. Professionals build habits and routines. Most chase money. Professionals focus on perfect execution. That's why consistency feels so hard. It's not something you achieve after a few wins, but something you live every day. Think of it this way. A bodybuilder doesn't gain strength from one heavy lift, but from many steady reps over time. A musician doesn't master music by one perfect performance, but by daily practice and repetition. Trading is the same. Your progress is built through thousands of disciplined decisions, not a single lucky trade. So the real question is, how do you build that discipline? How do you train your mind to stay calm when fear and greed try to take control? The answer is in building habits so strong that discipline becomes automatic, not something you struggle to find each time. The first stage is clarity. Without clarity, consistency can't exist. You need a crystal clear understanding of what you're searching for in the market. Unclear rules will always create uncertain results. If your plan says to enter when the trend seems strong, that's not clarity, it's guessing. A disciplined trader knows their entry, exit, risk level, and trade management in full detail. They decide their actions before the market opens, not while emotions are rising on a live chart. Once you have clarity, the next step is trust. Trust in your plan, trust in your edge, and trust in the numbers behind it. This is the area where most traders fall short. They test a strategy for a while, face a losing streak, and instantly drop it. It's like planting a seed, watering it for 2 days, then digging it up to see if it's growing. That's how most traders treat their systems. True consistency grows from faith in long-term probabilities, even when short-term results hurt. Trust is not emotion, it's built through tested data. If you've tested your plan, know its win rate, risk-reward, and drawdowns, every trade becomes easier. A losing trade no longer feels like a defeat, it's just another part of the bigger picture. The gap between a failing trader and a consistent one isn't about avoiding loss, it's about understanding it. The third step is routine. Every consistent trader is guided by daily habits. They don't just wake up, look at charts, and hope to profit. They plan, record, and set clear intentions before trading. After each session, they review every move they made. These routines shape their mindset, and that structure builds discipline. Without routine, emotions toss you around. With routine, you stay grounded no matter the market. Here's where journaling becomes powerful. A trading journal isn't just a record of wins and losses. It's a mirror reflecting your behavior. Over time, you begin to notice not only patterns in the market, but in yourself. Maybe you realize most losses come when you break your plan, or that fear makes you exit early, or greed makes you stay too long. Awareness is the beginning of change, and journaling gives you that awareness. Without it, you remain blind to your own behavior. The fourth step is patience. Consistency isn't built in a few days. It's constructed slowly, piece by piece. Most traders give up here because they crave fast results. But here's the irony. The more you chase speed, the longer success takes. The more you embrace patience, the quicker success finds you. Every consistent trader thinks in terms of years, not days. They treat trading as a lifelong craft, not a quick money scheme. Now let's go deeper into why patience feels so difficult. Our brains are wired for instant pleasure. Each win gives us a dopamine hit, and we start craving more. That's what drives traders to overtrade and break their own rules. It's not stupidity or weakness. It's chemical addiction to the thrill of winning. To develop patience, you must rewire your brain to value long-term results. Celebrate not just profitable trades, but well-executed ones, even the losing ones. Reward discipline, not just profit. The fifth step is detachment. Consistent traders don't attach their identity to one trade or even a whole week. They view themselves as operators of a system, not gamblers chasing wins. This separation creates emotional balance. When you win, you smile and note it down. When you lose, you record it calmly and move on. You're not celebrating like a king or collapsing like a beggar. You're just following your plan. But detachment doesn't mean carelessness. It means focusing on the process, not the result. You value perfect execution more than temporary results. This shift in mindset is hard because we're raised to measure success by results. In school, grades mattered more than learning. In sports, the score mattered more than the discipline. In trading, you must unlearn this mindset and redefine success as sticking to your plan. The sixth step is the emotional mastery. It doesn't mean removing emotions. It means not being ruled by them. A consistent trader feels fear, but doesn't act on it. They feel greed, but never let it break their rules. They feel frustration, but never abandon their discipline. Emotional control is like standing firm in a storm. Thunder roars, lightning flashes, but you stay steady. And finally, true consistency requires humility. The market is larger, smarter, and owes you nothing. The moment you believe you've conquered it, you've already lost. It humbles you deeply, that's why. Disciplined traders never stop learning. They adjust when a market shifts. They polish their methods and respect the unknown. Humility keeps your focus sharp. It reminds you that you can't control the results, only your response. And here lies the final truth. Consistency isn't about the market, it's about you. The market moves randomly in the short term, and only probabilities can hint at direction. It doesn't care about your hopes or fears. The only thing you can truly manage is your own behavior. And that's both the curse and the gift of trading. A burden because it forces you to face your flaws honestly. A blessing because it proves success lies in your own hands. Picture two traders starting today. Both learn the same strategy. Both put in equal hours. But one treats trading like gambling, chasing profits, breaking rules when emotions rise. The other treats it like an art, following rules, keeping records, and staying patient. After a year, the first trader is exhausted, broke, and bitter. But the second, even if not rich yet, has built a strong base of discipline. That's the real power of consistency. It grows slowly like compound interest in a savings account. Small, steady actions create huge results over time. Most traders don't realize the truth. Consistency isn't flashy. It isn't thrilling or dramatic. It's not the rush of doubling your account overnight. It's quiet. It's repetitive. It's patient. And that's exactly why very few ever master it. Humans chase excitement, not repetition. But the ones who embrace the routine, who fall in love with the process, they're the ones who reach true freedom. So why do most traders struggle with consistency? Because they're battling their own nature, fear, greed, impatience, and ego. These are human defaults, but they can be rewired. They can be retrained through clarity, trust, and steady practice. These are the real pillars of consistency. You don't need perfection or predictions or emotionless trading. You just need to stay consistent. If you can do that, show up every day, follow your plan, and trust the math, you'll find what most traders keep searching for but never reach. Consistency isn't a mystery or a secret, it's a choice. And that choice can be made right now, in your very next trade. Because trading isn't about one win or one loss. It's about the thousands of trades that shape your future. And your future isn't written by luck or chance, but by your discipline to stay consistent when others give up.